First-time home buyers are being boxed out of the housing market due to sky-high prices and rising mortgage rates. Mortgage rates just went above 4% for the first time in 3 years, and the feds are indicating more increases ahead. A senior economist from Wells Fargo told Reuters that home buyers have, quote, likely missed their opportunity to lock in low mortgage rates.
Great. While refinancing has been at the forefront of cutting down these costs, it's been recently revealed that Wells Fargo has rejected more than half of black mortgage applicants, with the highest income black applicants accepted at a similar rate to the lowest income white clients looking to refinance. Only 47% of black homeowners who completed a refinance application with the bank were approved, while 72% of white homeowners, 53% of Hispanics comparatively, they were approved. Senate Democrats are now demanding answers from Wells Fargo, whose racial tactics would lend white homeowners greater opportunity to save on refinancing their homes as interest rates continue to climb. Rising panel joins us now to weigh in. Shaunna Thomas is executive director of Ultraviolet, and Denise Long is a business consultant and contributor at Newsweek. Welcome to you both.
Good morning.
So Denise, what do you make of this? I never want to knee-jerk accuse anyone or any organization of racism without, good cause to do so. But this looks like a kind of troubling discrepancy in the rates. So what do you make of it?
Yeah, so I agree that we need to be discreet in how we label people. But what we do know is Wells Fargo started in 1852. And over these years where we've been taking a look at discrimination on the basis of race and ethnicity, it does have a significant history of finding itself on the wrong side of how it does business with Black Americans in particular, and also Hispanic folk. We know that the DOJ accused it of between 2004 and 2009 of impartially providing services to Black and Hispanic borrowers to the tune of 30,000 borrowers, and those are the ones who reported and the ones who the DOJ was able to find. So what we're finding here, and they've settled out of court or because of allegations in the tunes of billions of dollars. So there's a significant history here. Where there's smoke, there's likely fire, and the chances are that the fire at Wells Fargo has never fully gone out.
Yeah, and Shaunna, we were talking recently on the show about how even some algorithms that banks have produced wind up reproducing these racist outcomes because they take the inputs of their current system and the output is, well, we're going to charge black applicants more for interest rates because that's what our algorithm understands that you do here in the United States. Now, Wells Fargo has been particularly bad, when it comes to this over the years, over the decades, and it's, like she says, over more than a century. What has been the Democratic response to this, and how significant is something like an organization like the CFPB when it comes to this?
I mean, that is the good news in some of this, is that this research, this data has created an opportunity for people like Rohit Chopra at the Consumer Financial Protection Bureau to say, we're not going to accept redlining and we're going to pursue regulatory solutions. I think just going back a second, though, on where this is starting, I think the structural racism and the racist impact, right, doesn't have to be driven by an explicit white supremacist, and I think that's one of the arguments that the U.S. government is making. It really it is not about who and whether they are racist or not. It is having a racist impact, and there are biases that are being built into their algorithms, into their decision making, and it is apparently being driven by, those decisions are being driven by a group of people who are willfully blind to their own biases. When you have a population of people who have not had the opportunity to build generational wealth, that population is not going to meet high credit score standards. So we should create new ways of evaluating applicants. And they are starting to do that or looking at ways of doing that, but they're having to be pushed way too hard. And I think the U.S. government is going to have to step in even more to ensure that it happens. Unfortunately, for a lot of people, they've missed a huge window of opportunity over the last few years with low interest rates to build greater wealth. And they can't go back and fix that at this point, at least not with the current tools available to them.
Well, and Denise, one of the the issues that I often bring up on this show is that the housing supply is so artificially contracted by government policy that it's impossible to build in a lot of places, or you face huge obstacles. Developers face obstacles from government at the local level, and from your fellow citizens who will fight tooth and nail to thwart development. And thus there's this constraint on the housing supply that drives up prices that ends up robbing my generation, the next generation, from the ability to become homeowners because it's a supply issue. So why should this issue be talked about more as a generational issue and also as a racial issue, because it blocks people who, because of historic racism, historic disadvantage, have been in a lower income bracket and then are deprived of this opportunity even more so.
Yeah, so I think it's both and, Robbie. So there are several things that I think are misconceptions here. Many times what has happened with Wells Fargo, as well as others who were involved in the financial crisis around 2008 that centered around subprime mortgages, is that what you found is that Black borrowers with qualifying credit as well as income were discriminated on, not based on their risk. They were discriminated on because of their race. So they did have what they needed to qualify for a better loan, but they didn't get it. So they paid higher fees as well as higher interest rates. The other piece about stock, as you call it, housing stock, is there are plenty of inner ring suburbs, locations where Black people reside, who they would be happy to purchase homes, right, to flip those homes, to even build out and take care of and refurbish the homes that they live in. But when you go in to get a loan, you might not even qualify for that. So there's stock here, but are we, from a Black borrower perspective, making it so that they can't get what they need to even take care of the homes that exist currently in the market?
Right. Yeah, and I want to underline what Denise said there, is that, and as this Wells Fargo data shows, even when you control for income, Black borrowers get higher interest rates, or get accepted at the same rate. So even people who have the same amount of income, and some of that, if you try to disentangle it, Shaunna, I bet has something to do with the system's assumptions about wealth. The net worth of the Black population in the United States was just annihilated in the financial crisis. And at some points after 2008 was practically below zero. And so I think that the kind of financial system understands that even if you have the same income, you probably don't have the same generational wealth to fall back on it. Whereas a white borrower, they have the income, but if they lose their job or they run into some problem, they've got generational wealth that they can tap into. And will always, to their dying breath, believe that they made it on their own, even though they got that nice little $50,000 injection from their uncle to help with a down payment or to help them through a difficult time, because they worked hard they worked hard their whole lives, and so they don't really credit that. And so do you think that's some of what's going on, that this massive wealth gap is appearing in the numbers here?
There has been a massive wealth gap for a long time. It widened hugely over the last few years, and it's clearly playing a role. I think, housing activists have said there are some things like, stricter, overlays many lenders put in place, after the financial crisis, sort of raised the average credit score needed to refinance to as high as 775. So not only were they not sort of correcting for the existing wealth gap, they were actually making it even harder to meet the criteria. But there's also things like, and we've talked about the appraisal bias and redlining, but there's also the impact of the algorithms, which continue to be sort of unaddressed. And then there's the failure of policymakers. And this is where the Democratic Party, and the administration has a role to play to really mandate streamlined refinancing programs. So there are, I think there are solutions here. There has to be a will both on the part of the corporations, Wells Fargo and others, and the federal government to say, There are structural factors here that are leading to unacceptable outcomes. And we are going to do things differently such that we are not continuing to rob an entire generation and continue to rob entire new generations of people who have already been robbed of the ability to build wealth over time. And that's really a matter of just making a decision that you're gonna accept the reality about the impact, understand that it's a function of structural racism, and do something to fix it.
Is Wells Fargo too big to fail? And I would say that it's not, and perhaps it needs to at this point.
Sounds good to me.
Sounds good to Ryan. Well, thank you both for joining us. We really appreciate it.
Thank you.
Thanks for having me.
We'll have more Rising right after this.